Okay, here we're going to look at what happens when two people come together who don't have a partnership. Maybe they have separate businesses or they're just individuals, but they're going to come together and they're going to contribute their stuff and organize a partnership, right? So on 111, Kayla, Zahn, and Hector Perez organize a partnership called Boards. Zane's initial investment is $7,000 cash, $33,000 in boarding facilities, and a note payable for $10,000 on the boarding facilities. That's all Zane's stuff, right? So she's contributing what? Cash. She's contributing an asset, and the business is assuming, the partnership's assuming her liability for the boarding facilities, right? So Perez's initial investment is $10,000 cash. We're going to do two journal entries. We're going to do one for each particular partner to enter them into the partnership, right? So we're doing this on 111, and we'll do Zahn's first, Zane's, whatever her name is, right? What does she contribute? She contributes cash of $7,000, boarding facilities of $33,000, right? Both those things are assets, so we debit those. Remember, the business is assuming what? This note, right? So we credit note payable. We credit note payable for $10,000, and the last little bit of business is Zane Capital, all right? Zane Capital. Now we got to make our transaction balance, right? So I got what? I got $40,000 on this side, $10,000 here. So I know that her capital is $30,000 because that's what makes my transaction balance. 40 less the 10 is $30,000, right? So there we go. There we've added the first partner to the partnership, right? Remember, I'm in the books of the partnership. Now we're going to do Perez. Perez is easy too, right? 111, and he is contributing what? Hector's contributing cash of $10,000. In exchange, we are giving him capital of $10,000, right? So now we have our partnership. Both partners have contributed things to the formation of the partnership. And notice, now we're really careful. We have to label those capital accounts because each partner has one, right? Each particular partner has one. And the partnership now has what? $17,000 in cash and $33,000 in this boarding facility. They owe $10,000. And Zane has capital of 30 and Perez has capital of 10,000, right? So that's pretty straightforward stuff. We'll do another. I got another little simple example. Same deal. We'll take a peek at this one. It is almost the same thing, right? LeBron and Durant organized a partnership on January 1. LeBron's initial investment is $1,500, cash of $350, equipment of $1,650, and a note payable reflecting a bank loan for the new business, right? So again, this person is contributing what? He is contributing cash and equipment, but then the business is assuming his note of $500. That is the end of his particular piece of business. Then this other guy, Durant, is going to invest $800, right? And we're just going to take those assets in and give them capital to make it balance, right? I'll save you my poor penmanship. We know that what? We have to do what? Debit cash, debit equipment, right? So we just do those two debits. And then for this notes payable is a liability being assumed by the partnership. So we are going to credit that note payable, right? And then we just make our transaction balance, right? So I have $2,000 in debits and $2,000 in credits, right? We got to this by just plugging it, right? $1,650 plus $350, that's $2,000, right? 2,000 minus 500 gives us $1,500, right? Now, LeBron Capital, we labeled that person's because we have to keep separate capital accounts for each partner, right? Other guys, easy. They're just contributing what? Cash in exchange for equity. So it is what? Just cash, Durant Capital for $800, right? Debit and a credit. So that's really the process of organizing a partnership when we have two partners that contribute things to the partnership. Key takeaways. we don't just contribute assets, right? The partners can also contribute liabilities. So that is what that is going to be a reduction in the amount of capital that they're given for the partnership, right? Because the partnership's taking on that note. That note goes against the individual partner that contributes it, right? Don't make that mistake. So there's a little about organizing a partnership and the journal entries for admitting or for creating this new partnership.